All right, let's talk about a super powerful technique for any investor. You know, every investor has one big challenge, dealing with an unpredictable future. This lets you stress test your ideas against thousands of possible future scenarios. Now, this isn't about predicting the future, but about understanding all the possibilities. The tool we use for this is actually a pretty powerful method, the Monte Carlo simulation. Yep, named after the casinos. It basically runs countless what-if scenarios almost instantly. So you get a probability of outcomes, not just one single, rigid projection. So, how does this thing work? It assumes price changes follow a pretty standard pattern. The whole formula starts with a simple base, whatever yesterday's closing price was. Then you add in its historical volatility. That's just its typical daily swings. And finally, the secret sauce. You multiply it by a totally random element. This is key. So really, it's all about that trend, or mu, and the stock's random volatility, sigma. All right, let's see how you'd build this in Excel. It's a pretty straightforward 4-step process. Now, this little Excel function is really interesting. It's basically the engine of randomness here. It just generates a random number that fits a bell curve with an average of 0. So this formula combines yesterday's price with the trend, volatility, and that random function. Once that's in, you just drag the formula down the column. Simple as that. And here's the cool part. Every time you press F9, a new possible future unfolds. This gives you a much better, more intuitive feel for the range of potential outcomes. So, the real question becomes, what will thousands of these futures tell you about your strategy?